You've made it through eligibility, now it's time to actually join the plan. This is where the rubber meets the road. When you decide how much of your paycheck to save, where that money should go, and who gets it if something happens to you. Let's talk about what that enrollment process really looks like. When you're eligible to enroll in a 401k, most plans follow what's called active enrollment. That means you have to take action. You'll typically be asked to make two big decisions. First, how much of your pay do you want to contribute? Second, where do you want that money to go? That means choosing which investment options to put your money into. These choices are made through the benefits website or service center, and while they might seem intimidating at first, they're actually pretty straightforward once you understand the options. Now, not every plan uses active enrollment. About 40% of plans use something called passive enrollment or auto-enrollment. Here's how that works. If you don't make an active choice by your eligibility date, your employer will automatically enroll you at a preset contribution percentage, often around 3% of your pay. That money goes into a default investment, usually a target date fund aligned with your retirement age. You can always change the contribution amount or opt out completely, but you have to take action to do that. We'll dive deeper into auto-enrollment and how to navigate it in a future episode called Bridging Client-Specific Issues. Another important step in the enrollment process, naming your beneficiaries. This might not be something you want to think about, but it's essential. Your beneficiary is the person who would receive the money in your 401k account if you were to pass away. If you don't name someone, the default rule kicks in. If you're married, it goes to your spouse. If you're single, it goes to your estate, which could mean a long delay in getting the money to the right person, so don't skip this part. It's quick, and it matters. Once you're eligible to join the plan, you'll usually get a package of information in the mail or digitally. Let's break down what's inside. Enrollment materials. These will show you your investment options, how risky they are, and how they've performed over time. You may also find forms to name beneficiaries, roll over old retirement money, and step-by-step instructions for enrolling. Summary Plan Description, also known as the SPD. This is a plain language document that tells you everything you need to know about your plan, when you can join, how your service and benefits are calculated, when you're fully vested, how you'll receive your money, and how to file a claim if anything goes wrong. Think of it as your plan's owner's manual. So, to wrap up, joining a 401k plan isn't just about checking a box. It's about making choices that impact your financial future. Decide how much you want to contribute. Choose where to invest it. Set up your beneficiaries. And read the materials your plan sends you. They're full of answers. In our next episode, we'll explore contribution types, from pre-tax and Roth to employer matches, and more. And remember, tax laws and retirement rules can evolve. So always check with the IRS or Department of Labor for the most up-to-date information. Thanks for tuning in. You're one step closer to mastering your money and your future.